Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge. Welcome to my Strategy of the Day update here for October 12th, 2021. We just had a WASDE report here today that was a little bit more bearish against trade expectations. Soybean carryout with a 320 million bushel number here from the USDA, a little bit heavier in terms of the stockpile than was anticipated by the trade, around 300 million bushels. But this is the real shocker here is, of course, I think how the market has been pricing that in over the last couple of weeks. And I think the straw that broke the camel's back today, even more so than that WASDE news that was, again, a little bit more bearish against the trade expectations, was really what the U.S. dollar did. And you can see here on the chart I have here of the dollar index. Remember, trading futures involves risk and is not suitable for all investors. And everything I talk about here today is just my own opinion and not a direct trade recommendation. But with that being said, I want to start the day by taking a look at the dollar index, where we seem to be trading up towards, from the 103 highs, swing to the 89 lows here, up towards a 95 to 96, 50% retracement of this decline. We are heading up in what looks like a corrective structure against that pretty nice decline in the U.S. dollar last year. That, by the way, was the catalyst, in my opinion, for a lot of the strong exports we saw in conjunction with old trade deals where China had to come to the table, buy soybeans, buy corn, and do so at against record tariffs. We also saw record pork imports or exports last year, even in the face of those tariffs. So a downward trajectory for the chart of the dollar, which happens to be actually bouncing and heading higher here. To me, that could be a world stockpiling, export trade partners stockpiling U.S. dollars, buying up the chart of it for now, before eventually dumping those U.S. dollars that they don't have any need for. A Chinese fund only needs dollars to spend them here in the United States on our export products, and one of those would be soybeans. And now that soybeans have broke on the chart, we've got a capitulation and a bit of a test of $12 here. We'll see if we're going to start to see that turnaround in both the chart of the dollar as well as chart of soybeans here over the next week. So some key levels to the downside to watch now. That 18-day moving average on the dollar index at 93.80. We are above the 94 figure for the dollar, and we seem to be strengthening pretty well here. But you have to wonder if we're starting to hit a period of overwhelming exuberance, or have we had a peak strength for the dollar here? 100-day moving average coming in at 92.38, 55-day at 93, and that 200-day moving average down around 91.71. I imagine we'll probably get a pullback towards that 200-day at some point. We often do after, unless we start a major rally higher. But look for resistance now, and start to look for resistance. Not necessarily be a seller, but this is going to be something that we want to continue to keep an eye on, because it could be an early. We see that market turnover. We could see it. Could see an early reaction that maybe our agricultural markets will start to respond from. So. Soybeans here, big loser of the day, down 30 cents in the November contract. Poked its head below $12 here for the first time since March 30th, when we launched off of this area that started a rally from right around 12 bucks, and didn't end until 14.80 there for November beans. So the big question now is this enough of a retracement? We've broken back below the 200-day moving average, right, which is now at 12.83. We've broken and had some capitulation back towards that area of congestion on the chart. The old highs from January that we broke above held as support in March before that rally higher. We're down to testing that area as now broken resistance, now support again on a chart, and kind of a very corrective three ways back. The question again is, where does this chart find a footing? Where do export markets come in and show us the demand we're looking for and that we saw this time of year? A break in price down to the levels that we had seen big exports at one time before is a good way of testing that idea. So let's take a look here at the 4-hour chart for soybeans. Again, we are coming now into the 1183 area. That is a $1.40 drop here from our old range highs here at 1431. Extend that lower to 1183 is our first low. Maybe we're making our way down to that area. We've certainly made our way down to a test of $12. Will this $12 area be kind of like the $5 was for corn, which we'll take a look at in just a minute, where we were only below it for a brief moment before rallying back above? Or do we capitulate lower? I do see the potential for us to head down to 1150. Been talking about that area for some time. This is what capitulation looks like on a chart. And I think that this is the point where we're going to potentially start to see along the long trade form. In today's price action, 1212, 1210, and 1206 is a congestion zone of highs that actually, I like to look at these tick charts or 233 tick chart. You can see very clearly why those highs would be marked here on a range bar or a volume bar chart here using 233 ticks. You can see how quick that move was from 1214 up to 1230 highs of the day. Low liquidity, right at the number type of move. Blasted away any of the shorts, took out stops at old highs of the day before heading lower. Really dirty price action. Only to close the day lower just below $12. I definitely believe a pushback above is going to find resistance into 1205 to 1210. But if it can reestablish a reversal from there, this does make a great case for a capitulating low to form. However, you can't ignore, on the 4-hour and the 50, even the 15-minute chart, we're still very much in a downtrend. Have trend lines against the highs holding, and now have resistance from a 50% pull down around 1215 and at 1228 again, which is a 50% level from the highs of the month here at 1262 down to the lows at 1194. So again, we're catching a falling knife at this point, but we do see the opportunity for lows to form now that we finally have the capitulation we've been talking about over the last several months on the chart. So let's flip over now to the daily chart of December corn, trading above the 200-day moving average and testing it kind of as support here today at the 518 area. Interestingly enough, that was also a 50% retracement from our 498 lows to the 550 highs, a pullback right into the 520 to 525 area, right? That's 50% retracement of that move higher. Corn did fail to break above its 18-day moving average here at 531.5. I would have liked to have seen December corn back above that level, holding above that level, I should say, to feel more comfortable with some kind of reversal that could happen from this area. But at least there is trendline potential support, 200-day moving average support here for corn. And the fact of the matter is corn didn't make a new 6-month low here. That happened back in September when corn made its low with that September WASDE back on September 10th there. So last month was corn breaking below $5 for a moment. We closed above and had a nice rally off of it. This could just be capitulation and a test of 522. And like I discussed before, the move lower in corn down to test $5 in a brief, a quick recovery off of it, that wasn't exactly the reaction we had today for soybeans, but maybe the $12 area over the next 24 hours will see support. And hey, if it does, look at that. It was just like corn. Corn's September WASDE was beans' new October WASDE. 55-day moving average at 540 and 100-day moving average up at 547. Corn's got some resistance to chew through if we're going to continue higher, but this area in the chart does show good reason to be support. Of course, we start to break below that 200-day moving average around 520. I think the downside would accelerate for another test of $5, and maybe then corn too would capitulate and have a nice break lower, but we'll see. Wheat is looking pretty strong, and might as well just take a look quickly here at daily Chicago wheat. Big outside day with a positive green close to test basically where the 18-day and the 55-day moving average were here, right around 725. Held above those levels and closed above, so a push higher in the wheat is probably to be expected as we defended trendline support here and seem to be consolidating in a wedge against the 760 area, which could potentially lead to a breakout. Now, I think that the wheat, and I'll go back to corn in a second, but the wheat chart here is really more a dollar situation where if the dollar continues to strengthen, or even worse, continues to fall, wheat needs to price in a higher U.S. dollar valuation to price ration that stockpile here of U.S. wheat and keep it out of the global market and out of export demand. But we'll see if that continues on. Positive day for wheat across the board. And I don't know if I could actually say I'd be a seller here given how much this market is starting to coil up. So going back to that daily chart of corn, let's flip over, take a look at the 4-hour chart now for December corn, and kind of call it at that here for today. Full 50% retracement on December corn, again drawn from 497 highs, lows to the 48 highs. You can see that area here highlighted in blue. Now it's white again, the 522 area. I traded here into the end of the day. Now that was a break of trendline support, so we need to see a recovery in this market, but it's interesting that December corn at least has a supportive area to consider. We are, of course, and we have been holding below trendline support, though, prior trendline support, I should say. And this recent break against the lows is, of course, not a great development for the progress the market was making. But it does call into question now a new trendline resistance that, if we break above, is a good example or good reason for the market to be reverse higher and maybe head towards 550, 555. With all that being said, we did hold the full 50% retracement from 590 down to the lows of 497. That was around 545. So now you've got a kind of a fight between the 550 resistance, 545 resistance, and the 520 resistance. We'll see, or support. We'll see which one holds. We break below these lows and head down towards $5. You have a pretty good inclination of what's going on here. But the downtrend would still be intact. But because I think, are down into supportive areas for the soybeans, we're going to start to look and switch the hat a little bit to think about the long side. We've been pretty protective in trying to buy puts in the short term. The strategy of the week update, which I urge everybody to sign up for. There are links in the comment section and in the info section of this video to sign up for that webinar every Thursday at 2 p.m. where I take a look at some option strategies that will not only be actionable for the week going forward, but oftentimes go alongside news releases like today. There were strategies that we looked at last week that expired this upcoming Friday, or maybe for the monthly options that were all part of trying to trade around news events where we get volatility exactly like this, and how to own a future and use an option as your stop in the market, using very small time value and coming nearer term to even using weekly options to do so are all ways that we look at defining risk, with all trying to, of course, limit the downside, because it's not always about how much you make. It's oftentimes about how much you don't give back in some of these situations. So with that being said, we are still locked in the downtrend. We are into big, interesting levels where we might see demand starting to get enticed. Price has dropped and has capitulated now to the point where if there's a healthy move in the dollar index lower, we start to find a base in some of the row crops. We could start to see a reason and a rationale for export demand picking it back up. So with that being said, everybody, thank you for joining me here for the Strategy of the Day update for October 12th. Wanted to bring you a price action report on our WASDE. Obviously, we were a little bit more bullish or bearish against trade expectations on the corn and the beans, hence the lower closes today. But the truth is that we're arguing over a few 100 million bushels in an otherwise very tight carryout market, where that 100 million bushels, due to certain planting situations next year with an acreage argument through March, or a weather market next year, we could easily be in a very, very tight situation. Hence why beans are falling out of the teens, but are still maintaining onto that positive above $10 environment, and corn above $5 at this time. So have a great day, everybody. Can always be reached over here at Zaner. Give us a call. Give me a call. Love to talk to you more about how we can turn these ideas into trading and actual trading strategies for you. 312-277-0110. You can find me on Twitter. Shoot me a message here on Facebook at Dan SOTD, or of course sign up to the links below to receive our free Zaner Daily newsletter to get our entire team's commentary of current market conditions, or sign up, or do it both, of course. Sign up for that every Thursday at 2 p.m. Strategy of the Week webinar. Have a great day, everybody, and we'll be back with you then as price action develops.